This is Banter!
Crypto Benta for you. This is Crypto Benta. This is Crypto Benta. This is Crypto Benta. Crypto Benta for you. This is Crypto Benta. This is Crypto Benta. This is Crypto Benta. Crypto Benta for you. Smash that like.
You're going to curse me all day because that song is going to be stuck in your head all day. It's been stuck in my head for days now. I can't get it out of my head. Anyway, another Friday, another dip in the Bitcoin market. It seems like every single Friday, the prices go down, and every single Monday, the prices go up again. But there is one investment strategy that the biggest investors in the world all use. And they all say that this is the one strategy that has them making all their money. Today, we're going to look at that investment strategy and see if we can apply it to crypto. And if we can apply it to crypto, maybe we can make some life-changing money. So stay tuned, stay tuned. Today's going to be a massive show. And I promise you guys, it really is going to be a massive show. And I want to show you a few things here. Let me just shut down my alerts here because they're going to murder us. Okay, so massive show today. Remember, today we're going to be doing altcoin shopping. And we said to you guys, we're going to bring you a full spreadsheet of what you should be buying, when you should be buying it, how much you should be paying for it. And it's all based off technicals and fundamentals. So here is the sheet right here today. Let me show you the sheet. There's the sheet. We're going to be going through the sheet today with the sniper and myself. So big show today. Also, I've got some good news and some bad news today, because what I thought I'm going to do is I'm going to make a show for the salty people, because, you know, the salty people, we have to bring the bad news for the salty people. Otherwise, you know, how are we going to please the salty people, the salty cracks? So we're going to have some bad news for the salty people, and we're going to have some good news for the other people. And there is a lot of good news in the market. Unfortunately, not that much bad news for the salty people. Also, we have Alex Mashinsky on today. Alex Mashinsky from Celsius is coming on today. He told me that he is seeing that we are actually in the recovery. So I want to see exactly what he's thinking about the recovery. All right, so welcome. If you are new to the channel, subscribe to this channel. Why? Because we are the most loyal community in the world. We bring you fundamentals, we bring you technicals, and I can't tell you how amazing this community is. I'm so proud of this community. I'm so proud of you guys. I can't even begin to tell you. And I want to show you how karma works in the most mysterious way. Like, if you don't call this karma, then I don't know. So let's go through it. I mentioned to you guys the other day that I'm going to Mexico for a week next week. I'm going on a vacation. I'm going to go chill with my family while the market's moving sideways. I figure, let me take a holiday and come back to you guys from the normal studios the week after next. As I said that, members of the community started reaching out to me. And this is what happened. I mean, just get this. So this is one of the members of the community. What an amazing guy. What an amazing guy. Don't know the guy, never met him before. But listen to this.
Hey brother, what's up? Sorry, I just got out of the gym with my son. Hey, you're more than welcome to come down. Check us out. Just a bunch of cool people. Just made a great life from Canada to Mexico. I'd love to take you out on the yacht. If not, we can hang out in Tulum, go for dinner. Got some great spots there. Or you can come to the house and we can throw a big barbecue for you. Anyways, my name is Dallas Stratachuk. You're more than welcome to my house is your house here in Mexico. We say mi casa es tu casa.
So that was the first message that I got from, again, a community member. And then this is the next message that I got from the community member.
So I thought I'd come out to the garage and show you your chariot awaits. This could be picking you up at the Cancun airport. And we can roll in style. I know you like Porsches. This is one that you should actually think of getting. I know you're asking what car you should get.
So, okay, so that's how the day started, and a community member basically helping me arrange my entire trip of Mexico next week with the family. Then I went onto Twitter and I started selecting winners for Sniper School. Not knowing who the tweets were, I tweeted a few things and I said, hey, I want the salty people, I want the good people, and I want to select a few winners for Sniper School. And I selected some winners for Sniper School. And get this. I want to show you this. I want to show you. I have to find this. I have to find this for you. Then I have to find this for you. Anyway, long story short, what happened then was I randomly selected people for sniper school. And it turns out that one of the people that I selected was actually his nephew. Completely random. So you want to talk about good karma in this community? That's exactly what it's about. It's a family. We're all here together. We're in this together. And that's what it's all about. So guys, welcome. Smash the like button, smash the subscribe button. You can see that YouTube is limiting crypto content. It's crazy what YouTube are doing to the crypto content. It's also, well, people don't want to talk about it. But guys, it's a bear market out there. We can pretend that it is not a bear market out there, and you can see that every day people on YouTube and other places are all saying, oh, look, this is happening and that's happening. And guys, the market's been going down for over 90 days. When the market continues to go down for over 90 days, it is defined as a bear market. And markets have this as part of their cycles. You cannot have a market with only bull market because that wouldn't be logical. It just can't happen. So we have to accept that the market has changed from where we were. No one likes it, but we've got to learn to adapt and we've got to learn to make the most of it. This is the most important time for an investor because if you know how to trade your way out of a bear market, if you know how to survive a bear market, then you will survive anything. Anyone can make money in a bull market. And guys, believe me, I wish that the market would carry on running like it ran 3 months ago, because then I would buy half of Mexico, never mind have to rely on community members. But it didn't, because it's normal and markets came down. And we warned you that markets could come down. And that's why we kept saying to you guys that you need to be invested in things that would survive a bear market. We kept saying, make sure that whatever you invest in stuff that can survive a bear market. If something can't survive a bear market, do not invest in it. We also told you that you need to put 50% of your portfolio in a HODL portfolio, 35 to 40% in the 10x gems, and 5 to 10% or maybe 15% in the low cap alts. And the reason why we said that is that you would survive a bear market. So what you need to understand is that the best investors in the world use the bear markets to their advantage. And that's what we're going to talk about today. We're going to show you how you can use the bear market to your advantage in crypto and actually make money that you ordinarily wouldn't have made. And we're going to talk about the shopping list that I've said that we showed you guys. And that is exactly how the strategy fits in, because it's a strategy, and then we're going to show you how to execute the strategy, and that lands up being a shopping list. And we're going to show you how to get out of a situation if you're holding a bunch of shitcoins that aren't going to survive. So that's what's happening here today. Alex Mashinsky, I see, has just joined us, which is amazing. We are also, in fact, stop whatever you're doing. Just stop whatever you're doing right now. Stop. Smash the like button first, and I'm going to show you what you need to do. Okay, you need to go to a website. The website is called thebword.org/c/the-b-word. This is an event that's happening on the 21st of July. And at this event, Elon Musk is talking to Jack Dorsey about Bitcoin. And guys, you heard it here first. Here it is. Go and subscribe now. I think it's free. It is free. And anyone can join. So you really have no excuse for not joining this event. You've got some of the best speakers in the world. You've got Cathie Wood. You've got Jack Dorsey. You've got Adam Back, who was around since the days of Satoshi. In fact, I think he worked directly with Satoshi and a whole lot of other people. But definitely the most exciting part of all of this is that Jack Dorsey is going to be speaking to Elon Musk. And that is huge. I mean, I want to know what Elon Musk is thinking. And I wonder if Jack is going to get out of Elon what's going on here. Now, if you ask me, what actually would have happened here? Elon Musk, one of the biggest investors in Tesla, is Cathie Wood. And Elon does kind of what Cathie says Elon must do. I would imagine that Cathie was the one that calmed Elon down and said, look, you can't keep doing what you're doing. You absolutely can't keep doing what you're doing. And started to change Elon's tune. And I kind of also think that Cathie Wood have said to Elon, you have to speak to Jack Dorsey and you have to get it out there what you guys are thinking. And I think what Elon's going to say exactly what I've said to you guys before. As a clean energy company, we can't risk our reputation. We can't go on the one side and say we're working towards clean energy for the entire world, and on the other side support something that's not energy efficient. And I think what he's going to do is he's going to push the community, Cathie, Jack, who have already said that they are doing this, to start focusing on renewable energy. That is what I think is going to happen at that. And we know that's already happening. He's already put the ball in motion, but that's going to make Bitcoin a lot stronger. So guys, there's no excuse. It's for free. The the B word. Go there, register now. It is free. There's no excuse. If you don't register for free things, we can't help you in this community. All right, so let's get on with the news, and then we're going to talk about the recovery with Alex Mashinsky. So I want to talk about the salty news first, because I want to please the salty people. Are there salty people here? I mean, are they still around? Have they not left yet? Are there salty people in the comments? Okay, if you are around here and you're salty, let me know. Okay, let's go. So in the news today, there is some FUD out there, but to me, it's not really much FUD. And that is that the central bank of central banks, it's the International Bank for Settlements, which is owned by the Bank of Canada, the Federal Reserve, and a whole lot of others, has come out again. And again, they're coming out with a report. And in this report, they're saying that if any innovation needs to happen on digital currencies, it should happen from central bankers. And they're focusing on one part of the report, which says, the BIS report hints at going after crypto for its wasteful energy use in climate change world. Last month, global banking regulators also recommended putting restrictions on holding things like Bitcoin as capital and discouraging their use in banking. But if central banks want to maintain the exclusive power over money, they may have to do something a little harsher than what is contained in this week's report, offering a functional alternative. And the article kind of ends off by saying, they're not going to be able to do that. It says, no matter how good, it's unlikely to be good enough to compete against Bitcoin. So basically, whereas this article starts off salty, it's basically gone back to say, look, they're never going to be able to compete with Bitcoin. And they can try and compete with Bitcoin as much as they want. They really can try and compete with Bitcoin as much as they want. And they are trying, because yesterday, I don't know if you guys saw, I tweeted about it, but Fitch is a rating agency. Now, what Fitch does is it looks at companies, countries, debts, equities, and it analyzes those debts and equities. And it publishes reports with ratings. So AAA rating is a good rating and a D rating is a bad rating, right? Now, Fitch came out yesterday and said that the El Salvador banks may risk a downgrade because they will be holding Bitcoin on their balance sheet. And Fitch warned yesterday that if the El Salvador banks accept Bitcoin, which they now have to do because it's a law in El Salvador, and then they hold the Bitcoin on their balance sheet, then they are at risk of being downgraded because they will be more volatile for investors because of the volatility of Bitcoin. The rating agency also said that not only will those banks be downgraded, but even their parent banks in other countries will be downgraded because of the risk of the exposure. So if you think, for example, of a bank that is domiciled in America but has a branch in El Salvador, the risk is now that that bank will be downgraded too. So what's actually going on here? Fitch makes its money by getting countries, companies, and banks to pay them to write reports. So if you want a Fitch report written about your country, your company, you have to pay Fitch to write the report. So why would companies ever do this? Well, simple. Because if there is a report, then it becomes a real investment vehicle. So most pension funds and whatever else, they say, look, before we invest in something, we want to know what the Fitch rating is. And if you don't have a Fitch rating, you don't count. So the irony is that some countries pay Fitch to come in and do a report on them. Fitch does the report on them. It's a negative report. And sometimes it downgrades them. But Fitch's business model is exactly that. It is to get money from these companies. Now, I think what's happening here is that Fitch is looking at this and saying, who's going to pay us to do a Bitcoin report? Who's going to pay us to do an Ethereum report? So I think they're seeing the end of their cushy little position where they can charge these centralized companies a whole lot of money, and they're seeing this divergence to a new world, and they're kind of warning everyone to say, be careful. So again, more FUD, and this FUD is for the salty people. You know, I said I'm going to please the salty people first, but you have to ask a question, and it's the same question that Fox News asked Jack Mallers yesterday in an interview. They said, aren't you worried? Shouldn't countries actually be working with the central banks? I mean, shouldn't they be working with the central banks? Listen to how he answered.
The the world, not interested in stepping up to make this happen. You're kind of going at alone without these big organizations that usually step in and help second and third world nations get up to speed.
Liz, I wonder why they're upset. Because from a high level view, you're talking about a country, a sitting president that has to look at 70% of the lives living within his country that don't have financial access, that can't live a high quality of life because they don't have a vehicle to save and grow wealth. And all he's doing is plugging into an open distributed system to give hope to his country, to bring financial inclusion and basic human freedom.
Sorry.
And no, hold on.
Let me interrupt.
Upset
They
about
could
that?
lose everything. Well, because there are many stories, legions of them, of people being locked out of their accounts. Or, there was just this situation recently where you had a Bitcoin company in Africa setting up and then absconding with the money. I mean, maybe they're working on the side of protecting these people. Do you see that side?
I think it says a lot more about the folks that are against basic human freedom and plugging into an open system than it is those for fighting for human freedom. The dollar is still legal tender. El Salvador is not going against any pre-existing efforts. It's plugging into a new system where it sees hope and a better future for its citizens. I fundamentally see no issue with that. I think there's a lot of useful problems to solve with Bitcoin. And the problems you're bringing up are to do with a certain company or certain individual event. Bitcoin is an open distributed network. There is no central point of failure. There is no central counterpart that can make any decisions on behalf of a government, a president. If the president is to go haywire and lose his mind, the Bitcoin network is going to defend against it and not care one bit. There are no risks in plugging into an open, free, true system and giving his country hope. I see no problem with that, and I have a problem with those that do see a problem with that and are trying to get in the way. I find that morally wrong.
I mean, is that not the best comeback ever on TV? The best comeback ever. So they are doing this because the central banks have let them down. With the current regime, the current control of the central banks, the dollar is devaluing. 70% of the people in El Salvador don't have bank accounts, and that's true for every developing country in the world. Yesterday, the president of El Salvador, Nabil Bukele, he went up yesterday and he actually told people or showed people how Bitcoin is going to change their lives. Have a look at this.
Como les expliqué hace un rato, aquí nadie estará obligado a recibir Bitcoin si no quiere. Los que han tratado de sacar de contexto el artículo 7, se les olvida que hay un artículo 8 y se les olvida que hay un artículo 12. Una vez que se lee la ley...
So he started off with that, and then he finished off his talk by saying that every single resident of El Salvador, get this, every single resident of El Salvador will get $30 put in for free into their Bitcoin wallets. Just understand what this means, because it's not what it looks like. Every resident in El Salvador will get $30 put into their bank account. In a developing country, $30 is a lot of money. Now, the beauty of all of this is that this is a stimulus given to the community, but it's not given to the community out of printed money that the government can control. What the government is doing here is they are taking money that is Bitcoin money. It's not, they can't print it. They've got no control over it. And they're giving over $100 million to the residents. In fact, about $117 million to the residents. Compare that to the stimulus that the US is giving out by devaluing their currency and destroying their currency. Here we have a country that is not devaluing any currency and actually encouraging adoption. And what they're actually doing here is they are bringing 6 million, or maybe not 6 million, because the kids aren't going to use it, but let's say 4 million new users that will and should use Bitcoin every single day to the network. If you're in a developing country and someone says to you, you want $30, you download this wallet and you start using this wallet. That's what this man is doing. The government of El Salvador is giving the people back $120 million, which is not funded by devaluing an existing currency. I mean, that's why you got to call this guy a giga, mega, giga Chad. So that's what's going on out there. Let's look at what else is going on before we talk to Alex Mashinsky. And yes, Irina is here, so she says smash that like button. Irina, tell them, smash the like button. Let's see what's going on with the likes. Come on, before we talk to Alex Mashinsky. Oh my goodness. And yes, Irina is here, so she says smash 2,200 likes. Guys, 6,000 of you watching. Smash the like, obliterated. Show us that banter love. That karma will come back to you like it came back to Dallas, as you saw yesterday. I mean, the guy got into sniper school, his nephew got into sniper school. Smash. Okay, let's look at two more good news stories. So, to the salty people, thank you for watching the show. We had fun hosting you. It was great. You can leave now. You can leave. The salty people can leave now because the salty news is finished. Now we're talking about the good news out there. There's a lot of good news out there. There's a hell of a lot of good news out there. One bit of really, really good news out there is that Citigroup has started a new division, a brand new division called the Digital Asset Group within its wealth division. So now we've got Morgan Stanley, Citigroup, Goldman, all in this race to set up these divisions to start getting people into crypto. I mean, this is what's going on here, right? So would you bet against all the banks who are now going to go to all their clients, starting off with the wealthy clients, but also now there's an integration between the banks, and I think it's one of the financial switches, which allows people to buy Bitcoin directly from their bank account. So pretty soon in the USA, everybody will be able to buy Bitcoin using their bank accounts. Now, you want to bet against that? You've got to be crazy to bet against that. You've got to be absolutely crazy to bet against that. Let me show you another bit of really, really good news. Again, not for the salty people. If you're salty and you're still here, you should leave now because this is the good news. Circle is bringing, yes, I like spicy people. Circle is bringing an app. Circle is the company that does USDC. They are, I think, a Coinbase-backed company, and they are bringing a DeFi app to institutions with an API that will allow DeFi, will allow these institutions to seamlessly integrate into DeFi apps like Compound Finance. So this is an amazing news for blockchain adoption. It shows it's giving institutions a regulated, safer way to get into DeFi, specifically to DeFi on Ethereum for now, which means that it's very good for Compound and very, very good for Ethereum. But I don't know if this is good for us, and that's what Alex Mashinsky is going to help me understand today. Because if the banks bring their money, right now we're loaning money to all these protocols, and we're getting insane returns. We're getting a whole lot of insane returns. When the institutional money comes in, there's going to be a flood of money coming in looking for the same DeFi returns, and then the returns will go down. So on the one hand, yes, we want the institutions to come in, but on the other hand, if they do come in, they're going to destroy our yield, or at least that's how I understand it. Let's ask Alex Mashinsky what he thinks. Alex, how are you, my friend?
Hey, Ron, thanks for having me back.
So good to see you.
Love the show. You're killing it with the users. You're gonna be just a few more days. You're gonna be the #1 guy in crypto. So
I hope so. I hope so. You know, in the bear market, we always have salty people that lost money and then can't take responsibility for their actions. But if they invested in Celsius, like we said, they didn't lose any money because Celsius was the most resilient token, I think, throughout the entire bear market. At one point, it did not move, right?
Yeah, we have a very strong community. It's a hodler community, so it's you don't have to work hard to convince them that they need to continue hodling. So definitely close to 1 million people now, and definitely I want to thank all of them for sticking with us. And we now paid over 700 million in interest, right, over the last 3.5 years. So there's a very good reason why they're hodling.
I mean, if you just look at the sheet, we're creating the sheet for our community, but you can see that the high for Celsius was about 8, the recent low was about 5, and the drop from the high is about 38%. Now, if you compare it to every other one of these gems, 69%, 73%, 80%, 80%, 82%. Celsius, pretty strong. I mean, well done to you guys. Very, very strong.
We all set an all-time high right after the crash, right? That $8 that you're talking about happened just few days after the Bitcoin crash. So that I don't think any other token has seen a new all-time high after the Bitcoin crash.
Sure, what an investment. One of my best investments, I must say, one of my best investments. So thank you for getting me in. Alex, I have to ask you about the story that I did before this, which is Circle creating a one-touch app with an API for institutions to be able to participate in DeFi. On the one hand, seems like it's amazing to get more money into the ecosystem and more users. On the other hand, won't it dilute the returns that we're currently getting with this flow of USDC and USDT, where right now you can get, I think, 10% on Celsius. Some places you can get as much as 20% if you're willing to tolerate the risk. Won't this dilute it?
Yeah, there's no question that it will dilute it, but like any coin that has the other side, and the faster adoption by institutions will also increase the prices of the underlying assets, because more institutions holding more coins and tokens will drive prices up. So, like what we've done differently at Celsius is that we have 5 sources of yield, not just DeFi. DeFi is just one of the platforms where we create yield. And if the rates on DeFi drop, then we just move the asset somewhere else. So lending to exchanges, lending to institutions, mining, as well as retail lending are kind of like the other 4 legs of the stool. And what you care about as a user is a blended rate. You don't really care about what the rate right now for DeFi. Actually, right now, the rates on DeFi are very, very low. They're like 1 or 2%.
What are the rates right now for USDC deposits or USDT deposits?
8.88%. So it's definitely a higher rate than any DeFi platform.
And Bitcoin?
Bitcoin is 6.2%.
Amazing. All right, Alex, let's move away from Celsius and DeFi. Let's talk about a market recovery. You're a veteran. You've been around for a long time. You've seen the market go up and down a ton. Where do you see us now? Are we in a bear market? Are we in a bull market? Are we in a short bear market? Because I think people think that when you say bear market, it means 3 years. But bear markets can be short. You can have a 3-month bear market or a 6-month bear market. Where are we now, and how do we recover from here?
Look, when the markets were going crazy, new highs every day in February and March, I kind of said that this is too much, too fast. Got a lot of Twitter haters because of that. But this is a healthy correction, right? All of this growth and pricing, a lot of it was fueled by leverage, which obviously did not help our community. All that leverage now has been taken out of the system. More than 1.5 million retail users have basically got liquidated, both in the main crash and the recent crash. So now we are basically, the current pricing level at that 30,000 level is very strong support. Can we go a little bit lower? Maybe yes, but my point is that every day you have institutions, retail, corporates buying more coins. We know how much is being created with mining or with other activities. So we know that that demand is stronger than supply. So I think there's still some selling pressure in China due to the liquidation of these mining operators. A lot of them have taken loans to buy the equipment. And because of that, they need to basically return all those loans. And some of that is gonna happening with their consent. Some of it is happening without their consent. So I think we're at the end of that cycle. And then we're gonna start seeing us going back to that 40 to 50,000 level. I still think we're going to close the year above 100,000, as I said, in January. And so I'm not changing any of my projections. Again, this is the hardest asset in the world. There's no more, besides the mining, there's no more Bitcoin being created. And when you're seeing countries adopt it and accounts being issued to everybody in that country, like El Salvador, I mean, you can't ask for anything more. And your comments about the BIS, they just need to remove the I from their letter and just call themselves BS, because
for sure.
Yes, because look, to a hammer, everything looks like a nail, and they're basically saying the only ones who are authorized to issue or manage money are central banks, and all of us are saying no, that's just not true. So I think in the beginning they ignored us, then they laughed at us. Now they're trying to shut us down. And I think, again, the Bitcoin network is the largest, most resilient computer network in the world, and it will stay that way.
I want to just talk about that for 1 second. So you talk about the largest, most resilient computers network in the world. This has been the biggest attack on Bitcoin ever. The hash rate of the miners closing down so suddenly in China was reduced by 50%. And yet the Bitcoin network continues to print money. So what we're saying is that amongst all the other attacks that it was going through, the Bitcoin network survived a 50% hash rate attack. Now, what most people don't understand is, if you look at this chart here, this is the miners selling Bitcoin, as you say, to fund moving equipment, to leverage, to get more equipment, etc. And this is a lot of selling. At some point, this selling has to stop, and the sellers are going to dry up, and then the buyers are still going to be here because the institutions are adopting more and more and more every day. And then we're going to be back in the bull market, right?
Yeah, so look, all these things are also opportunities. Celsius invested $200 million in the last month. We're now investing another 80 million in mining operations in North America, and all of those operations are renewable energy. So when you see an opportunity because there's a crackdown in China, it's not like it's a bad business. The opposite. Now mining is even a better business, right? So I think you're going to see a lot of that capacity migrate to other countries. Some of it will disappear. Some of it is going to get shut down and never going to come back. But I don't see any impact to the Bitcoin network. Again, the total hash power is so tremendous. The world's 100 largest supercomputers managed by the NSA and the Chinese government and so on are less in computing power than the Bitcoin network. So even when you take it down 30%, that is not really that much of an impact. The Bitcoin protocol automatically adjusts to a lower hash rate, and it just keeps on walking, right? You can't take it down.
Okay, so you made a big prediction for price at the end of the year. You said it would be over 100,000 at the end of the year. What's the road between now, which is, let's call it July, and 100,000 in December? You're talking about 6 months. 6 months to get to 100,000. Right now we're at 33,000. We've been down from 60,000 for 90 days or so. What's the road between 33,000 and 100,000 at the end of the year?
Yeah, I'm watching the new account creation, like how many new accounts are being created on the Bitcoin or Ethereum network, and I just don't see a slowdown there. So did we go through a FUD and hype? Of course. We did, but the accumulation by the largest wallets continues. Adoption by institution continues. We cannot open institutional accounts fast enough. We have over 350 institutions already, and my legal department is basically telling me, look, we're all going to quit because you're making us work 7 days a week. So that's how much demand there is from corporate and institutional customers after this correction, right? So I just don't see that slowdown. So I understand that there's a lot of FUDing and everybody saying, oh, Bitcoin is not green. Let me tell you a secret. You were talking about Tesla before. When you plug in your Tesla to your outlet and you think that you're riding an electric car, guess what? More than half of that electricity was generated with coal and natural gas. But when you use a Bitcoin, 76% of that is renewable energy. So actually Bitcoin is cleaner than your Tesla. And these are the things that most people just don't understand. And the FUDing, again, the FUDing is coming from the banks and the financial institutions who have a lot to lose. They have nothing to gain from Bitcoin making it, from Bitcoin becoming the reserve currency of the planet. So we just have to be, we have to have a filter that tells us what is real news, what is fake news, and we're going to keep on hodling.
Okay, so we said prices and fundamentals can remain disconnected for a certain amount of time, but they can't remain disconnected forever, right? You mentioned that you are seeing institutional growth. Here's the chart. The yellow shows you the growth specifically in new accounts, net entities growth on the Bitcoin network. The stats are clear. We are having more new accounts now than ever on the Bitcoin network. So not only, just get this, not only do we have more accounts than we've ever had, but the rate at which we are growing is bigger than it's ever been. So we're getting more signups than ever before. We're getting more signups at a rate like we've never seen before. The fundamentals and the technicals can only remain disconnected for a certain amount of time. That's it. Then it has to go back to equilibrium.
Yeah, and again, look, the selling in China is a very short-term event. It's not like it will be selling for the next 3 years, right? So most of the liquidations already took place. Again, at Celsius, we did not lend to a single miner in China. We only invest in North America because we want to make sure we can actually collect any kind of defaults. But you know, even if there are losses there, and there probably are from the lenders over there, that is a short-term phenomenon. So I expect that to be another week or two of forced selling. And then again, we're going to go back to an equilibrium of buyers and sellers. And the equilibrium is that there's just a little bit more buyers than sellers every week, every month. And that's what drives the price up. So, you know, and again, you can see the accumulation. You can see the accounts with over 1,000 Bitcoin actually adding very aggressively. So I think it was something like 7,500 Bitcoin that was added last week to these accounts. So all of the stats, all of the indexes show you that we're at the end of the short-term correction, and we're going to go back to the up to the right momentum that we had before.
Agree. And again, I think all the data actually lies in two charts. This chart over here, which shows that the miners are selling, 3 charts. This chart over here, which shows that the whales or the long-term holders are buying, and the last chart is this chart over here, which shows that the growth of Bitcoin is unstoppable. And in fact, the smart investors are actually buying right now because they think that they were waiting for a dip and they're buying the dip. Alex, before I let you go, I have a question for you. And it's I know you're a very wise man, a very smart man. If I were to ask you, is there one common strategy that all the most successful, if there is one common strategy that every single successful investor in the world applies to investing, what would you say that one strategy is?
Well, averaging your buys is definitely the most viable strategy, because like right now, with all the fear and the FUD, it is hard for people to say, oh, I should be buying. But this is exactly the time that you should be averaging in, right? Even if you put a lot of money at 60,000 and you're just killing yourself saying, I'm the dumbest person in the world, I bought at the top of the market. Now is your opportunity to average your price, right? To come in and average down, and it may go down again and you will average again, right? So if you buy a little bit every month or every week, you hodl, you earn yield on it, the compounding interest makes you earn more than anyone who thinks they can time the market.
Okay, now, the smartest investors in the world, we know that they average down. We know they buy companies that are going to change the world, right? Do they ever sell?
You should sell, and you know, I had I do an episode every Friday, like you do every day, but I do once a week. And a few weeks ago, I said, you know, winter's coming and you should sell some. And again, people were just killing me. I mean, they were like, I think Bitcoin was at 55,000 or something. And they were just like calling me a hater and whatever. So you do have to also take some money off the table. If you see something running too much, too fast, you're probably not going to hit the top of the market. You're probably going to sell a little bit early. But you need to do the opposite also. You need to rebalance. And what does it mean, rebalance? You need to look at your portfolio in relation to the rest of your investments. And if suddenly one part of your assets is doing phenomenally well, you do need to sell some, right? So hodling is great, but rebalancing your portfolio is something that all the professionals do. They do that every quarter. And now is obviously not the time to rebalance. But you need to keep that in the back of your mind, right? Average in and rebalance.
The way I see it, the smartest investors in the world all have one strategy. They invest in things that they think are going to change the world. And then they hold those tokens or those equities for long enough to let the protocol or company actually change the world. That is, if I look at every single successful investor, the most successful investors in the world, they didn't sell every 2 minutes. They actually let things happen, and that to me is the biggest thing. Alex, love having you on the show, but our time is short today. We'll chat again soon. Thank you, my friend, and thank you for all the great work that you're doing out there. Amazing, amazing, amazing. Really one of our favorite.
Thanks for having me back. And I think all of your viewers need to really appreciate all the hard work you're putting in, educating the community, growing the community. So congrats on all the hard work.
Thank you, my friend. Thank you, my friend. We'll see you again soon. Love Alex, love Celsius. I mean, really, one of the best protocols out there. Okay, so before we get into the strategy, we are going to destroy your entire weekend. And you know how we're going to destroy your entire weekend?
Crypto Benta for you. This is Crypto Benta. This is Crypto Benta. This is Crypto Benta. Crypto Benta for you. This is Crypto Benta. This is Crypto Benta. This is Crypto Benta. Crypto Benta for you. Smash that like.
You guys are going to be singing it all weekend. I mean, the song's destroyed me. I sing it in my head all bloody weekend, all weekend, all weekend, all weekend. All right, let's get into the meat and potatoes. Let's get into the main part of the show today, which is the one investment strategy that all successful investors have. And I've studied many successful investors, and I'll show you some real case studies. But the one strategy that all these successful investors have is that they look for things that are going to change the world, and specifically network effect things that are going to change the world. They buy them, and they hold them, and give them enough time to actually do their thing. And if you think about the most successful investors in the world, people that invested in Uber or Bitcoin or Amazon or Ethereum or Google, these people didn't buy and trade in and trade out and buy and trade in and trade out. They bought, they held, and today they are in the money. And I want to show you what I mean by in the money. So I managed to find the Uber sheet. People that invested in Uber. And I want to show you what these people invested and what they got back. So let's look at a fund called Founder Collective. They invested 95,000. They got 372,661,000 back. The Mitchell D. Kapoor Trust invested 75,000 and invested and got back 372 million. People that invested $25,000, like the Hitforge, got 124 million. Jason Port invested $25,000 and got $124 million back. Jason Calacanis, who you know runs the All In podcast, invested $25,000 and got back $124 million. What I'm trying to show you is that they did not have the opportunity to sell their Uber because Uber shares were illiquid. And so even if they wanted to sell their shares, it was such a process to sell the shares and value them that it actually wasn't worth it for them. With tokens, we had a huge disadvantage because we get them, a week later they come to market, and then we get itchy fingers and we want to try and take profits. What we should be doing is identifying protocols that are going to change the world, buy them, and give them enough time to actually change the world. Buy something that you have conviction over and give it enough time to change the world. Now, I've been getting a lot of, again, salty people who are saying the only thing that you can teach me is to buy and hold, which is not exciting. We've always said to you guys, we've said, guys, 50% of your portfolio is in the HODL portfolio. 40% is in your 10x gems, and you buy them and you hold them and you never trade them. And 5 to 10% or 15% is in the low cap alts and your trading portfolio. And any money that you make there, if you guys have been watching Sheldon, he keeps telling you to take that money and to move it into your long-term wallet and to lock it up into your long-term wallet. The real money is made by buying protocols that you think are going to get network effect and change the world and hold them. And when the market comes down, you know what you do? You do what the smart people do. Now, I'm not sure how smart he is. In fact, he is quite smart. And what he said, Kevin O'Leary, he said, this is a guy who wasn't into Bitcoin, but he's now realized that it's a network effect gem that's going to change the world. And he's upping his portfolio from 3% to 5% because A, he's now getting yield, and B, he knows that Bitcoin is going to change the world. And so that's what I want to talk to you guys about today. We want to show you the strategy. We want to show you the strategy that is going to show you guys to buy the network effect gems and to hold them until they change the world. And if you bought them slightly more expensive, who cares? Because they haven't even started changing the world yet. You can't take a look at your portfolio right now in the midst of the worst market that we've seen in months and say, okay, I failed. Ridiculous. You got to zoom out. You got to let these protocols actually change the world. So if you're invested in protocols that are not going to change the world, get out of those protocols and put them into protocols that actually have network effect and are going to change the world. Even my trader Sheldon agrees with that, right, Sheldon?
What's up, buddy? Yes, I do, of course. No, it's something you've taught me big time along the journey, is that the scary thing is 90% of the coins aren't going to be here anymore. And that was a big click for me. They have to be fundamentally powerful and they have to change the world.
if you look at the smartest investors in the space, Mike Novogratz invested in the Ethereum ICO, 30 cents, $3, $6. We all did. We all bought Ethereum back then. If you hold your Ethereum, you're 400 times in the money today, even after the correction. Bitcoin, people that bought it at $10 and $20 or even $100. Just buy, hold, network effect gems that are actually going to change the world. And then hold them for long enough to let them change the world. So that's the strategy. It's always been the strategy. We've always said to you that your portfolio must look like, let me find that chart again to remind the people. Okay, your portfolio must look like that. The reason why your portfolio looks like that is because 90 or 85% of your portfolio is in things that already have network effect and are going to change the world. And then it's just a case of where do you buy them? So what the sniper and I have done is we've created this spreadsheet, and we're going to show you and we're going to share the spreadsheet with you guys. But the spreadsheet has a whole lot of columns. The first column is the name of the token, then the category, and that's part of our HODL portfolio, for example, Bitcoin. Will it survive a bear market? We're not going to buy anything that's not going to survive a bear market. Then we looked at the all-time high, the monthly low in this correction, how much pain we've gone through, and how much it's bounced. Then the sniper's given us an entry point and said, if you can get in at this point, it's a bargain. And this is where it gets amazing. So I'm going to remove the take profit range, and I'm going to remove the chart link, because I don't think that you don't want to be trading in and out of these. You want to be buying them to hold them. But this is where it gets amazing. This is where it gets amazing. In crypto, we have an opportunity to stake tokens to participate in networks. And you can get amazing staking rewards. I mean, if you look at Pancake, you can get up to 106% staking rewards. So what we're looking for is we're looking for the network effect gems. We're looking at what entry point, and then we're looking to see how much yield we can get by staking them. And if you're not staking your tokens, you're missing out on one of the biggest opportunities of your life, because other people, or when you think about how a token is priced, people take the fair value of the token, they add what they can, or they subtract what they can earn in staking, and then that becomes the value of the token. And if you're not staking your token, then you're missing out on the fair value of the token. So the strategy is to identify the 10x gems, the 100x gems, and the HODL portfolio gems, to find the right entry points based on the sniper's technical analysis, and then to make sure that you stake and get as much return as you possibly can in the bear market. And if you do that, you're going to make a ton of cash. There's just no other way to look at it. Cool. Should we go through a few examples? Sheldino, what do you say?
Of course, buddy. And I think the power of staking is obviously understanding you're getting coins and you're obviously growing your coin portfolio, but it also gets it out of your hands for once. I think the biggest problem with everyone is that they always have so much access to the money. They keep panicking out, or they keep allowing the emotion to control and not understanding that the best part is to get an entry, get the right coin, and to leave it. That's one of the best things you can ever do in crypto. And I think by them having it there all the time, that they are continuously getting in and out, and I think that's a problem. So I think structure, what we've brought the last week, it may still seem a bit slow now, but people are going to soon realize why we've actually strategized this.
Bear cycles are part of a market. Smart investors use bear cycles to accumulate. You've seen that all the smartest investors in the world, Michael Saylor, Mike Novogratz, all the big names in the world are saying, hey, the dip is here, we're going to buy. The whales are saying, hey, the dip is here, we're going to buy. Even short-term investors are coming in. So the smart investors are saying, these dips, opportunity to buy. The beauty is that you don't have to time this at the bottom. You don't have to get in at the bottom. Because if you're holding it and giving it enough time to change the world, then whether you bought Bitcoin at 30,000 or 32,000 doesn't really matter. If Bitcoin goes to 300,000, you're not even going to remember whether you bought it at 30,000, 32,000, 35,000. And so what you got to do is you got to say, what is my entry point? How much money can I make staking? And then how much capital appreciation is there? Cool, let's go through some. Sheldino, let's go through Bitcoin. So Bitcoin says, Bitcoin, of course, is going to survive a bear market. There's no doubt about that. It is right now 55% below its high. It's 16% above the low. There's 11% until the entry price that you said would be the entry price. You're saying that it's actually less than 11%. You're saying that your entry price would be around 30,500. Tell me what your thinking is there.
Yeah, but so looking at obviously the charts, we went there very, very quickly previously. Let's make it a little bit bigger so we can all can see it. And I think another thing to understand, what we're actually doing here, guys, is we are starting to make sure that at whatever entries we're getting to now, we're looking at a 25% range now, where it's time now to get this entry. Who cares if it goes another 10% less, to stake it and to understand where this is going to be in a year's time. That's the whole purpose of this. So we're looking at a really strong laddering in method as investors, to stake them, earn those rewards, and to actually just get them out of your hands so you can stop worrying about, you know what I mean, this in and out and then this sort of thing, because you are catching Bitcoin at a 55% special, and we need to understand that. Like Rand said, if it's at 350,000, you're not going to care if it was 400% or what do you call it, 1,000% from where it is now, or 1,010% or 1,020%. That little bit does not matter. So where we're looking chart wise, a really good top up entry to get your Bitcoin now and to stake it and to get it out of your hands is definitely around the 30,000 to the 31,000. So we basically average it to the $30,500 region.
Okay, but let's be clear. You are laddering down. That's exactly what Alex Mashinsky said. If you have $100 to invest, when the price hits the 30,500, which is what Sheldon is calling it to get to based on the technicals, you only put in 25% of the capital that you want to invest. Okay, now we're saying that entry point is about 10% away. We're about 10% away from our entry point, but you can stake at 6%, right? You can stake at 6%. Let's look at Ethereum. Let's look at Ethereum, because I think Ethereum's another good one. You can stake Ethereum on Binance and make 6.28%. Let's look at what your entry point is on Ethereum.
Same thing here. So my entry is 1,700 to 1,750. So we are not too far there. Obviously, we know that dominance has been creeping up crazy, and at some point we're going to have a reversal in dominance again. Nothing can just go in a straight line. So this is looking really good, where I'm going to buy it, stake it, and get it completely away. Because end of the day, we have now caught Ethereum from this entry at 58% to 59% off of the all-time high.
All right, let's move down the list. Dot, you're saying, so let's quickly look at the fundamentals of Dot. It's in the HODL portfolio. It will definitely survive a bear market. The all-time high was just under $50. The monthly low was $13. You can pick it up now at $15. Okay. You are saying that if it goes anywhere near 1350, 1370, buy it, which is about 10% away. Your staking reward, if you just stake Dot on Kraken or Binance, you can get 12% more Dot. And when Dot goes up, the 12% that you get is going to go up. Right? Okay, show me how you got that entry point.
Same thing, but it's just a very big demand zone and a supply zone that we've went to. So a lot of these first entries are to fill the gaps, the imbalance that we formed from those big strong wicks to the downside. So we know when the price goes there quick, we usually return to those zones, and these are the ones that we want to be laddering in. So that's a very key start in laddering investment wise, guys. Remember, this is not short-term traders. This is if we can catch these prices as the investing point to hold for a year. Fantastic. It's brilliant. And it's 60-something% above it, well, from its all-time high, which is huge.
Now, what I've said here is I've given you guys 40 or so gems. Okay. Now, why did we give you 40 or so gems? Because we know that most of these tokens or some of these tokens will never get into the buy zone. So we've given you a whole list of things that we think are going to survive a bear market. We have identified the ones that we think you should buy, and we've given you a buy zone. Let's have some more fun. Let's look at things like Uniswap. Now, Uniswap, one of the most important tokens in the whole ecosystem, because it is a decentralized exchange, and DeFi can't work without these third-party decentralized exchanges. All-time high, $45. Monthly low, $14. Price now, $16.91. Sheldon's saying that if you can get it 17% lower than it is today at $14, you should be buying it.
Yeah. Anywhere near those previous lows we had on that big dump the other day. Brilliant. As an investor, 25% in, get it out, stake it. Brilliant. We are perfect. I see we have lost Rand there, guys. So let me share my screen here and we can see what we're talking about. So the ones that we basically brought up today, I do have the list here. We'll update. Are you back there, Rand?
I'm back.
Okay, cool.
I slapped myself out of my own show. Okay, let's get back to your list. Sorry. Okay. Let us go back to the list. I want to show you the ones that I think are slightly more exotic. So obviously the risk becomes more as you go down the list. But let's look at something like a pancake swap. So if you believe in the BSC chain, you may believe in the BSC chain, and you believe in DeFi and stuff like that, then Pancake may be a good one. Now, Pancake, the high was $44, the low was $10, it's trading at $12.90. The interesting thing around Pancake is that you can stake it on Pancake with no impermanent loss, and you can earn 106%. So you can double your Pancake every single year. So,
That's huge. That's huge.
So don't be fussy about when you get in, because you can make money by just staking the token. Most of the people miss that you can actually stake tokens. And this is not liquidity farming with impermanent loss. This is staking. This is just staking your tokens to validate or to participate in the networks. I want to show you some of my other favorite tokens. So everyone knows how much I love Kusama because of the crowd chain auctions. All-time high, 621. Monthly low, 170. Price now, 190, 200, whatever the price is. We're saying if you can get it at 180, 190, 170, and you can stake it at 12% on Kraken or Binance, it's a no-brainer. Buy Kusama, hold it, wait for the parachains, and stake it. Right?
100%. 100%, buddy. I don't think anyone understands how much specials everything's already on. Even if there's another 5% or 10% that goes below that, where we are in 6 months to a year time, it's time to start thinking as investors, stop worrying about getting that dead accurate. We're already catching it at 60, 70% off. That is a good investment on its own already.
The questions you have to ask yourself is this a blue chip? Will it survive a bear market? Now, we've given you guys some risky ones at the bottom of the sheet. And here we're saying, look, we don't know. It's risky. We don't know if they're going to survive a bear market. They're unproven. But if you want to get into real risky stuff, like DeFi, the high was 828, the low was 167. It's trading around the low now, so at 163 or somewhere around there. Okay, and there's a lot of staking for DeFi. You can go and stake it, and you can go and earn by liquidity farming. So again, will they survive a bear market? If the answer is definitely, ladder in your buys. Here are your entry points. Your first entry point where you put in 25%. When it gets there again, then we'll talk to you again and tell you what the strategy is based on the market at the time. You're never going to catch the bottom. But if you want to be like the smartest investors in the world, then put your money into the network effect gems that haven't even started to change the world and hold it. And that's how you're going to make money. And I want to show you this. Arweave, it's one of my favorite tokens. What few people realize is that Arweave is going to be one of the biggest tokens to change the world. Why? It's the only blockchain which stores things forever. And yesterday, the Hong Kong's Apple Daily, which is one of the biggest publications in Hong Kong, because of all the censorship, started to back up their publications onto Arweave because they know it's going to survive. Again, how many applications are using Arweave? Not a lot. Is it going to change the world? Definitely. Is it getting network effect? Definitely. You can buy it now before it starts changing the world. Things like Luna, which I talk about a lot. But if you buy Luna and stake it, you get airdrops from all these amazing projects. You get airdrops from Mirror, Anchor, Pylon, Orion Money. So not only do you get the reward for staking, but you get airdrops of all the new projects being built on the network. Now, the amount of money that I've made on these airdrops is maybe more money than I've made on most other protocols. Free airdrops.
That's crazy. I remember even Uni giving that $2,000 or $4,000 airdrop a few months ago as well, just by holding it in the wallet and staking. It's powerful. Though.
Buy less tokens. Get to know the ecosystem. Hold them through the bear market. Start staking, getting airdrops. Get to know your tokens and be like the smartest investors in the world. Give the tokens enough time to change the world. If you want in and out, that's great. With 5% of your portfolio. That's it. Cool. Saldino.
Awesome, buddy. I think what's nice is we got that spreadsheet. So we're going to bring that up whenever some of those coins are getting to those key areas. That's what we're going to focus on a daily basis. The main thing is now everyone's got you got a structure. You got something you can fall back on and just understand the power of staking and understand the power of getting it away from your hands sometimes. So you can stop this in and out. We're already catching everything at such a damn special. Just give the market a little bit of time and you're going to soon see what we mean.
All right, so we're going to drop that spreadsheet in the Crypto Banter Telegram group, which is crypto_banter Telegram group. We're going to drop the spreadsheet there. If you want it, it will be there in the next few hours. Guys, I'm not here next week. In fact, I will be here only if something massive happens in the market. You got Sheldon, maybe 1 show a day, maybe 2 shows a day. Sheldon, I'll see you back in Cape Town in the studios.
Awesome. Excited, but enjoy time with the family.
Cool.
Cheers. I see you taking.
I will see you guys again. Maybe next week. If not, then the week after. And if you are trading, guys, trade well, my friends. And until then,
Crypto Benta for you. This is Crypto Benta. This is Crypto Benta. This is Crypto Benta. Crypto Benta for you. This is Crypto Benta. This is Crypto Benta. This is Crypto Benta. Crypto Benta for you. Smash that like.
Crypto Banter is a social podcast for entertainment purposes only. All opinions expressed by the hosts, guests, and callers should not be construed as financial advice. Views expressed by guests and hosts do not reflect the views of the station. Listeners are encouraged to do their own research.